Good morning and welcome to GAP's FIBRA conference call. All lines have been placed on mute to prevent any background noise. After the presentation, we will open the floor for questions, and at that time, instructions will be given if you would like to ask a question. In the next hour, we want to walk you through FIBRA GAP, what it is, why we are doing this now, and what it means for GAP's current shareholders and for investors considering the vehicle itself. For those who may not be familiar with FIBRA E structure, let me provide a brief overview. A FIBRA E is a Mexican-listed trust vehicle designed for the energy and infrastructure asset that allows investors to participate in the cash flows generated by mature operating business. In this case, the mature business would be GAP's 12 Mexican airports. The vehicle issues trust certificates listed on the Mexican Stock Exchange and is intended to provide an efficient mechanism to monetize and recycle capital, while at the same time maintaining operational control of the underlying assets. From a tax perspective, the FIBRA E benefits from a pass-through structure. It is required that at least 95% of its annual taxable income be distributed to certificate holders. Following the transaction, distributions received at the GAP holding company level would continue to be subject to taxation upon subsequent distributions to our shareholders, consistent with the current dividend framework. Importantly, from the perspective of GAP shareholders, we do not expect a material change in the economic substance of the distributions received. Rather, the transaction will primarily represent an optimization of capital structure of the Mexican airports and funding flexibility, while at the same time preserving exposure to the cash flow generation of the airport portfolio. The message is straightforward. GAP has significant infrastructure commitments over the next 4 years under our MDC, and we seek to fund those commitments with a balanced capital structure. FIBRA GAP is one more tool in that strategy, a long-term infrastructure vehicle that matches the asset profile with the right type of capital. GAP retains control. The operating platform does not change. What changes is how we fund the next CapEx commitments. Before we start, please be advised that the statements made today may not account for future economic circumstances, industry conditions, the company's future performance, or financial results. As such, any information discussed is based on several assumptions and factors that could change, causing actual results to materially differ from current expectations. For the complete note on forward-looking statements, please refer to this presentation, which is for informational purposes only and should be read together with the operating documents once available. Certain statements may depend on assumptions, regulatory approvals, market conditions, and the financial transaction documents. What I would like to emphasize here is consistency. The same team that has managed GAP through 2 decades of growth will run FIBRA GAP under the same operating and financial discipline and investor communications standards that have characterized GAP as a listed company. This is the team that you already know. Our speakers today from GAP are Mr. Raúl Revuelta, Chief Executive Officer, Mr. Saúl Villarreal, Chief Financial Officer, and me, Alejandra Soto, Investor Relations Officer. At this time, I will turn the call over to Mr. Raúl Revuelta.
Thank you, Ale, and good morning, everyone. Thank you for joining us today. Why FIBRA GAP? The logic is simple. We believe it can become a long-term capital recycle vehicle for GAP, one that allows us to gradually unlock value from mature, predictable infrastructure assets, but only when we see attractive reinvestment opportunities for the group. At the same time, GAP continues to face significant investment opportunities and capital needs across its platform. The proposed FIBRA allows us to finance mature, regulated, and high capex infrastructure assets through equity, rather than relying only on additional leverage at the holding company level. The 5 key messages I want you to take away about why we are creating FIBRA GAP are: the Mexican airports concessions remain the foundation of GAP's cash flow generation. These are regulated, resilient, and long-duration infrastructure assets, and GAP will continue to own and operate them. FIBRA GAP should be understood as a capital recycling platform, not as the investment, as 100% of the proceeds will be used to deploy in the Master Development Plan. This allows us to gradually monetize a limited portion of mature infrastructure assets through equity, only when we identify attractive reinvestment opportunities. GAP Holding will retain control and operation of the current assets. In our Mexican airports, we have significant investment commitments under the Master Development Plan, and we want to fund those commitments with a balanced, efficient, and diversified capital spread. FIBRA GAP gives us another long-term funding source that is specifically tailored to infrastructure assets. We want to be clear regarding the perimeter. FIBRA GAP will hold minority stake in each of our 12 Mexican airports concessionaires. What is excluded? CBX, our Jamaican airports, and any subsidiary that does not hold a Mexican concession title for airports. GAP remains in control of approximately 96% of the Mexican airport sectors, and the management agreement means that the day-to-day operation will not change. FIBRA GAP ownership over time may vary depending on future contributions made to the financial capital requirement. Nevertheless, FIBRA GAP will have the possibility to structure a revolving credit facility to fund future capital requirements pro rata to maintain its initial ownership. The indicative ownership interest of approximately 4% of Mexican airport equity is based on the proposed issuance amount divided by the post-money value of Mexican airports. It will change with the final offer size and valuation. GAP will remain the controlling shareholder, and for the FIBRA will be the administrator, and accompanied by a technical committee and an audit and corporate practices committee. The reason why we are evaluating this now is that we are entering into an important investment cycle. We want to execute the MVP, preserve financial discipline, and retain strategic funds. FIBRA GAP provides additional financial flexibility rather than concentrating all the funding pressure in the traditional debt markets. It matters because excessive leverage will reduce the strategic optionality for future investment opportunities. For investors, the specified 5 components I want to be direct about how they connect. First, the investors will be buying into a high aviation sector delivering accelerating and sustaining long-term passenger growth of about 6.2% CAGR since 2010, nearly 4 times Mexican GDP growth over the same period. Second, the portfolio spans 12 airports with meaningfully different passengers profiles. Tourism in Los Cabos and Puerto Vallarta, cross-border dynamics in Tijuana, VFR and business passengers in Guadalajara. Third, the operator, GAP will be the manager of the FIBRA, allowing this vehicle to be backed by the leading airport operator who has handled 31.4% of all passengers in Mexico during 2025 and has the strongest market share growth record in the sector of the last 15 years. Fourth, the governance structure is built for public markets being leveraged by GAP's outstanding record in corporate governance practices. And fifth, the return profile is based on distributions tied to the operating results in a sector that is clearly regulated in a stable cash flow industry with an operator known for giving its shareholders consistent return throughout the last 20 years as a public company compared to other FIBRA vehicles. The data shows how the airport sector has performed positively in the recent years. Passengers have grown at a sustained pace of 6.2 CAGR since 2010, while Mexican GDP has only grown at 1.6%. CAGR during the same period. That is 3.9 times more than the national GDP. That refers to structural drivers such as tourism, regional connectivity, domestic air travel penetration, and the expansion of low-cost carriers. With that context, CAP has delivered stable growth of 7.2 CAGR, outperforming peers in the sector, gaining market share at a stable pace. We believe that the growth outlook is supported by several independent engines. Tourism remains strong, with Mexico as one of the most important tourist destinations globally and the #1 country in Latin. Airlines continue to invest in their fleet. Besides the ending of Pratt & Whitney engines, maintenance will bring back over to the airport sector and potentially expand routes to the United States. These factors create a constructive backdrop for airports with the right capacity and location that bring us to GAP's positions in the market. GAP's biggest strength is the diversification. We operate 12 airports in Mexico and 5 of the 10 business airports in our country with different demand profiles. Tourists visit friends and relatives, business and cross-border dynamics. That mix has helped the platform remain resilient across different sites, and our route development reflecting the highest market share growth in the country, going from 27% market share in 2010 to 31.4% market share in 2025, making us the leading airport operator in the Mexican sector. I want to highlight the quality of the airport assets that will form parts of FIBRA. The Mexican airports combine resilient traffic growth with very strong financial performance. Passengers traffic has grown from 44 million passengers in 2019 to 57 million in 2025, which represents a 4.6 CAGR. This confirms the strength of the demand profile across our airport network. What's more important is not only a traffic growth story, it's also a monetization and profitability line. Over the same period, revenue increased from approximately 12 billion pesos to 24.3 billion pesos, representing a 12.4 CAGR. In other words, revenue growth has outpaced passenger growth. At the same time, the Mexican airports continue to operate with EBITDA margins of around 70%, which is a very attractive level for infrastructure investors and demonstrates the efficiency and cash flow resilience of the plan. It is despite the change in concession fee that passes from 5 to 9%. FIBRA offers exposure to a mature, regulated, and highly profitable airport infrastructure plan with a proven passenger growth, strong revenue growth, and cash flow generation. The MTP is very concrete. It's about increasing capacity, improving passenger experience, strengthening operational efficiency, and ensuring that our airports are prepared for the future airline growth. The objective is to invest ahead of demand in a disciplined manner, consistent with our concession obligation and long-term service standards. Our main goal is to improve passenger service quality, providing infrastructure for airlines' future growth with greater capacity for simultaneous traffic and larger aircraft operation. We recognize that governance is critical in any vehicle sponsored by a listed company. FIBRA is designed with a governance structure that includes public market bodies, independent oversight, and aligning between GAP shareholders and FIBRA holders, comprised of the technical committee, which serves as the functional equivalent of board of directors in a public listed company, the audit and corporate practice committee, and the shareholders meeting with the main goal of protecting shareholder interests. It will include conflict of interest protection with independent oversight, transparent expenses, and non-incentive distribution rights. All of this is backed by a structure leveraging GAP's outstanding corporate governance practices, with the end goal to align the interests of GAP and FIBRA holders of the long term. The logic of both sides of the table is straightforward. FIBRA provides a new and complementary source of long-term capital let us optimize the capital structure at Mexican airport level and broaden the investor base beyond traditional debt and equity investors. This vehicle is designed to reinforce GAP's growth plans and financial flexibility. For FIBRA GAP holders, the vehicle provides unique access to a sector with structural growth, higher barriers to entry, operated by a team with a long track record with an attractive yield profile, with consistent distribution and access to the only FIBRA E in the airport sector. It is complementary structure that matches long-term infrastructure assets with long-term infrastructure capital. The key takeaways I wish you to appreciate about why FIBRA GAP are. First, Mexico aviation sector has compounded at nearly 4 times GDP growth for 15 years, and we see no structural reason to change. Second, GAP portfolio is generally diversified across market, passenger styles, and demand drivers. That diversification reflects the performance throughout multiple cycles. You are not only investing in a high-growing sector. Third, the operator has 28 years managing this portfolio, the strongest market share growth in the country, EBITDA margin consistently close to 70%. Fourth, the governance works for public market investors, independent oversight, conflict protection, no IDRs transferring costs, designed to align interests, not magnitude. This will be leveraged by GAP's history of superior corporate governance practices. Fifth, the return profile is linked to operating results. Distributions come from cash flow generated by the infrastructure assets. Sixth, you will have clear visibility with stable future cash flow, as this is a highly regulated sector with clear visibility to revenue tariff increases that at the end will be reflected to more distribution to our investors. Let me close with this recap. FIBRA GAP is complementary financial vehicle, not a corporate restructure. GAP's concessions operating model and strategic direction remain unchanged. The proceeds will be 100% primary and will flow directly into Mexican airports concessions to fund infrastructure investment under the Master Development Plan. And GAP will remain the controlling shareholder and administration, preserving operational continuity, governance standards, and alignment with investors. In short, FIBRA GAP is designed to fund growth, preserve financial flexibility, and provide long-term investors with direct exposure to Mexican airport infrastructure operated by GAP. The presentation ends here, so we will start with the Q&A session. So please, Alex, start with your mic.
Thank you, Raul. So right now we will have the time for any of your questions. So it's time to raise your hand, and we will open the mic for your questions. So we are seeing some raised hands. So we will start with Guilherme Mendes from JP Morgan. So Guilherme, your line has been unmuted right now. So please, can you unmute it? Unmute it.
Hey, hello everyone. Thanks, Raul, Saul, Ale, for the time. My question is in terms of the size of the offer, 10 billion for roughly 4% of each of the assets. If the idea was to cap at 10 billion pesos or to have a small stake on each of the airports. In other words, why not doing something bigger or having a bigger stake at each of the assets? And what is the limit that the FIBRA can end up having of each of those assets? And lastly, if at some point in time the idea would be to include other non-regulated assets into the FIBRA structure as well, or if it will only stick to the 12 regulated airports in Mexico. Thank you.
Thank you, Guilherme. This is Raul. First of all, in terms of the size of the FIBRA, this is the beginning, it's just the initial offer. For sure, this will be gradually increasing. Always, if we are seeing any other opportunities for the better use and optimize the use of the leverage for other M&As, for instance, that to bring new businesses to our company or bring businesses with a even better growth phase on the short term. That is like the first part of the question. The second part related with why just the 12 airports. In terms of the FIBRA, it's an entity that was designed mainly for infrastructure vehicles, specific concession ones. So with our airports, we're aligned with that. We think that there's no, I would say, space into the FIBRA for the purely commercial businesses operated directly by us that we are having today. In terms of the long-term size that we have, we will need, or we have like a cap of 30% on the concessionaries for going to FIBRA.
No, and Guillermo, this is Saul, and just to complement, it is we have this cap, as Raul mentioned, is 30% of the equity of the airport. So obviously we want to continue after this IPO to see the possibility of different loans over this vehicle.
Perfect. Thank you.
Got it. Thank you both.
Thank you.
Thank you. So remember, if you want to ask a question, you can raise your hand and we will open your mic. So then we say, well, now we have Gabriel Himmelsfarb from Scotiabank. So please, Gabriel, your mic is already open.
Hi, can you hear me?
Yes, we can. If you can speak louder, that would be better.
Sure. Quick question on the structure. The 12 airports that are entering the FIBRA, the cash flows will be both the regulated and the unregulated, or just the aeronautical revenues, or can you give us a bit of color on how it will work for the regulated and unregulated portion of cash flows inside the FIBRA?
Hi, Gabriel, this is Saul. Yes, it's for both, for aeronautical and non-aeronautical. So it's everything related with the concessionaire, the total revenues recognized. As you know, we have other subsidiaries that are, as Raul mentioned before, it will be included just the 12 airports and includes the 100% of the total revenues, aeronautical plus non-aeronautical.
Okay, thank you.
You're welcome. So the next one will be for Jens Spiess from Morgan Stanley. So please, Jens, your mic is already open.
Yes, hello. Thank you, guys. So I just wanted to ask, do you plan to list this in Mexico or also do an ADR in the US? And if you could provide a bit more details on the timeline, what you have in mind. Oh, I think I was muted, right?
No, we can hear you, Jens. Thank you.
Oh, perfect. All right. Thank you.
Hi. Well, for now, we are going to make some roadshow with local investors in Mexico. We are not planning to make it international. Probably the follow-ons will be part of that. If there is some relevance or interest, we can follow that. But for now, it's only for locals. But you can participate if you want through the banks that will be structuring the FIBRA gap. So you can participate if you want, but we don't have any plan to make any roadshow in US or in other countries. Related to the timeline and for this, officially we begin with the promotion of the FIBRA today with this conference call. And then we will begin with some one-on-one meetings in Mexico City. And if there's any interest from some investors, we will hold some meetings besides that. The idea is to be at the end of June including the issuance to the incorporation of the FIBRA.
All right. Perfect. And if I may, a follow-up question. I was wondering, so you will have basically one-to-one economic participation in the equity of the Mexican assets that are within the scope of the FIBRA. Just wondering, will there be like administrative expenses at the FIBRA level that sort of don't make it one-to-one, like the same economic interest that you would otherwise have? I don't know if I'm making myself clear.
Well, yes, I don't know if you're referring to the cost of operation of FIBRA. We do not believe that will be significant. Obviously, FIBRA will have their own administration. We will have to incorporate the audit corporate practices committee besides the technical committee. So the corporate operation of the FIBRA will have some expenses, but we do not believe that it will be relevant to the size of the issuance in the size of the FIBRA. I don't know if there's your question because the sound wasn't very clear.
Oh, that's clear. Thank you.
Thank you.
Okay. Thank you, James. So we will continue with the next question, that it is from Francisco Suarez from Scotiabank. So Paco, your mic is going to be open.
Thank you so much for this call. Thank you, Ale. So two questions, if I may. One, will this creation of this vehicle, is there any concern that it may create a structural subordination for bondholders? That's my first question. And my second question relates, it's actually a follow-up on the question that was asked by my colleague on Morgan Stanley, related usually FIBRAs as an advisor, and there are transaction costs inside, and also potentially FIBRAs do charge fees and and this sort of expenses. So if I understood correctly, you don't expect the creation of this FIBRA vehicle to create fees or other transaction costs that will take away the economics and the potential economics of the FIBRA vehicle as such?
Thank you, Paco. This is Raul. I mean, in terms of expenses, we're not foreseeing any really additional changes and over expenses. We think that the FIBRA will bring some marginal additional costs for the management of the vehicle, but nothing really relevant in terms of what we have seen on the assets.
Yes, and related to the subordination vehicle, or we don't expect to have any kind of that. We believe that the FIBRA will remain as part of GAP's portfolio and will not have any additional subordinate to debt or to equity, because just to remind, our current debt is at a holding level and there is no debt into the airports or the concessionaires.
Got it. So to make sure, you don't plan to create a fee structure in the creation of FIBRA GAP?
No, additional, no.
Okay. Thank you so much.
Thank you, Paco. So now we are going to pass through Alejandro Aníbal. So please, Alejandro, your line should be now open.
Yes. Hello, Alejandro Aníbal from Jefferies. Thank you for the question. A bit of a follow-up to the previous question. do you expect or are you worried that this kind of new structure can create some kind of structural discount on the holding company versus the FIBRA?
No, we're not foreseeing that. I mean, first of all, we are talking about really this initial offer will be really a small part of our aeronautical business that will be in some way shared to the equity of the FIBRA. So we are not seeing really any kind of increase of value in holding for that. We will say that we are optimizing some even fiscal factors for the holding that will bring value for our equity holders on GAP. So yeah, I think that this will optimize first our financial structure, but also will give us this flexibility to bring additional opportunities to our company looking at positions.
Okay. And as a bit of a follow-up to that answer, so can we expect an acceleration of the kind of chasing those opportunities outside of the 12 airports that you were kind of mentioning then?
I would say that we will continue as always. GAP is looking for new opportunities. The thing is, we bring to our portfolio only opportunities that make sense and to be accretive for our shareholders. So we will continue to bring in opportunities, but it is important to have in mind that we will keep the discipline that we have for bringing the correct opportunities to the company with the creation of value for our shareholders. So we will continue as always bringing opportunities, but you could be sure that we will continue being really disciplined with the opportunities that we bring that create the correct value for our shareholders.
Fantastic. Thank you.
Thank you, Alejandro. So now our next question will be for Andrew Miller. So Andrew, your line should be unmuted right now.
Hi, everyone. I have three questions, but hopefully they're reasonably connected. Number one, don't quite understand how I'm better off as a minority shareholder in the equity of GAP as a result of this. Number two, if I'd chosen not to invest in the equity of GAP, why would I choose to invest in the FIBRA? And number three, if you didn't do this, are you effectively saying you would break your debt to equity covenants in funding the new MDP? Thank you.
Thank you, Andrew. Yes, the minority shareholders won't be affected at all. It is at the concessionaires, and we are protecting all their interests. So, first of all, it's important that will retain the control of the airports with equity more than 96% for this IPO. We do not expect to decrease in that. The management of the FIBRA will be in the side of that. So we are considering that already. If you are not invested in equity, why will be FIBRA? FIBRA has other benefits. It has a pass-through dividend to the shareholders, and will not reflect any tax benefit for all investors. But if you invest in GAP, you will continue having this benefit in terms of dividend, in terms of pricing for GAP. On the other hand, FIBRA will represent a benefit to GAP holding in terms of the corporation and long-term visibility and the capacity for additional debt in raising funds for investment opportunities. So at the end, I would say that this vehicle is more interested for pension funds in Mexico. That is part of the benefit they have. So for internationals, probably it's pretty interesting. I would say that it's basically the same if you go directly to equity or to FIBRA. And FIBRA is related to your third questions. Equity or FIBRA will be providing equity to funding the entity. That's the major reason of this vehicle. And obviously, at holding level, the GAP will continue leverage other projects and will continue with that capacity at the balance sheet. So, in this, we believe that we have the opportunity to have more benefits for our shareholders, benefits for our tenors of FIBRA and for debt market also.
Okay. Thank you.
Thank you, Andrew. So the next one will be passed to Michael Galvez. So Michael, your phone should be unmuted right now.
Thank you so much. Just a kind of a follow-up from the previous one. I would like to understand what level of debt can be passed to this new structure under the FIBRA E, and if you can give us a bit of color on the financial covenants, if this type of asset sales or asset transactions are allowed in your loan facilities and also in your local market bonds, or if bondholder meetings are going to be required.
Okay. Hi, Michelle. This is Raul. Well, the level of debt for the group basically is not debt in this. It will be part of equity. It won't change in terms of capital structure for our GAP holding. It will help for capital structure at the concessionaires, but at the equity level. So, related to the financial covenants, basically it's not a bond. It's not a bond. It's not a bond certificate. It will be part of the equity of the airports, and the covenants or the restrictions in terms of analysis is not applicable for this instrument. We will have holder meetings, yes, because we need shareholders structure for future decision at FIBRA level. So basically, we will have another administration over the FIBRA that we will discuss before to operate together with the technical committee in audit committee.
Okay. Yeah, but my question was focused if the actual bonds that are outstanding, if they have any certain financial restrictions or limitations toward these kind of operations, no? Or if the actual debt needs to approve this transaction, or if it's not needed.
It's not needed. Our debt is at GAP holding level. It's not at the airport. Airports are the main vehicles of the FIBRA. So we do not expect and foresee any restriction or limitation to structure the FIBRA from bondholders.
Thank you.
Thank you, Michelle. Well, now we're going to pass the call to Samuel Alkin. So, Samuel, your line is already unmuted.
Hello, guys. Thanks for the call. My questions are, the first one would be if GAP or a related entity will own any equity in the FIBRA. And the second one would be whether GAP, the FIBRA will own stakes in GAP's airports, or will they look to invest in other assets such as infrastructure or other assets that are not managed by GAP.
In general, when we talk about invest on other different assets, the FIBRA was created with the contribution only of the concessions, and the rules of the FIBRA specifically just talk about airport concessions. So any additional acquisitions or new businesses created outside the concessionaries will be part of that holding, not part of the FIBRA. That is one important part to have in mind. The perimeter of the FIBRA only includes the specific concessionary business of airports in Mexico.
Yes, and just to complement related with your first question, GAP is not planning to hold some or invest into FIBRA.
And regarding the last one, that if GAP will own equity on the FIBRA, yes, they will own around 96%. Yes. Thank you, Samuel.
Thank you.
Then I see you again, Guilherme. Do you have a follow-up question?
Yes, I do. Thanks, Ali. Actually, the follow-up to Samuel's questions is just wanted to understand why not co-invest on the FIBRA in a way to maybe avoid conflicts of interest of which assets in the future could be included or not could be included on the FIBRA level. And the second follow-up is about the timing of the offering. I understand the whole idea of doing this FIBRA is to help to finance the CapEx, but this MDP CapEx has been there for a year and a half now. So it has to do with the CBX acquisition last year and the discussions about Motiva Airport last year as well. So just wonder if there's anything else on the timing of the announcement other than the other capital allocation announcements. Thank you.
Thank you, Guilherme. In terms of the timing, for sure it was related with the finalizing all the process for the merge of CBX. For sure that was an important part of our decision. And for sure, as you remember, English, we are trying to keep as all the company of the GAP holding 2 times debt to EBITDA ratio. So the idea is keep that discipline, and the best way to keep that discipline in terms of our balance sheet is using other kind of tools that could be the FIBRA. So that was mainly the timing. As you know, we would have paid for 25% of additional of the shares on CBS. We are just doing that on the next weeks. But yeah, in general terms, that is the timing of why we are announcing the FIBRA right now.
And related to the use of proceeds, yes, we are planning financing part of the MDP of 2026 and to complement part of 2027 MDP. It won't be part of won't be part for capital allocation for dividends. It will be used only for CapEx.
Thank you, Guilherme.
Thank you.
Well, we have a question that was sent directly from Carlos de Legarreta, and he's asking, can you talk about how does this affect the TUA or maximum tariff implementation? Guessing, since the cost of financing in the Mexican airports will be higher, since it will be fully funded with equity rather than a mix of equity debt. There should be a relevant increase in the TUA to reach the target IRR.
Thank you, Carlos. Just to have in mind, it's theoretical, it could be, but let's put it on some context. Remember that all the debt of GAP is on the holding level. So In the last time that we renegotiate or review the tariff on 2024, at the end of 2024, at that moment, there was zero debt in the concessionaries. It means that that negotiation will reflect that everything was equity on the WACC. There was not debt at that moment of the airport. So always in terms of the maximum tariff, you could have better results or better IRR if you are using only equity. That is correct on how the rules works for the maximum tariff. But it's important to have in mind that at the last time that we renegotiated the tariffs, and in this moment, there is no debt on the level of the airports.
Thank you, Raul. Now, Gabriel Himmelfarb, I'm seeing you again. I don't know if you have a follow-up question.
Sure. Yeah. I have two follow-up questions. The first is on the organic growth. So you mentioned only Mexican concession title assets will enter to the FIBRA gap. So perhaps adding some toll roads or other types of concessions and how they could be financed if the entire amount of the offer will be to the MVP. And the second part is on the MVP. I think the capex for the MVP is already running up. So you'll be financing the MVP from 2027 and beyond until 2029. Like 2026 is already being set.
Yeah. Thank you, Gabriel. I mean, in terms of the non-organic growth, always, again, the FIBRA gives us additional flexibility. So, specifically the FIBRA E, the one that we are using, it was created by the government for infrastructure federal concessionary projects. So, yes, it could fit a highway. It is a concession of federal rights of a concession. So, if we're going to acquire some additional federal concessions on infrastructure, yes, on the FIBRA, it could fit. The other part related with MVP, again, this is, I would say, a not linear tool. This is an additional tool for the balance sheet of cash. So we will see in some moments going to the debt, to the seguros or debt market in Mexico, or even outside Mexico. That we will keep that. But also we have this additional tool for getting the capex on our airports, that is the FIBRA. So it's not complete linear that we will make the future decision of the coming years of go directly to the FIBRA for financing the MVP. It will depend if we have some M&A door, or we see some additional opportunities on the business directly operated by that. For instance, that will be the decision will be made in terms of what we have in the table.
Okay, thank you very much.
Yeah. Thank you, Gabriel. And now, Alejandro Anibal, I'm seeing you again, so maybe you have a follow-up question as well? No, maybe not.
Oh, yes.
Okay.
Sorry, I was. Thank you very much for taking my follow-up. So quick question. You're talking about kind of, this being kind of good to an extra tool for financing and so on. If for whatever reason this deal does not go through, can we expect an equity raise at the gap level? That's the first question. And then, as a bit of separate, can we see, let's say, a bigger dilution than the 4% that you're talking about in case the market is not as receptive to this deal that you expect?
Yeah, I mean, in terms of going through or expand the equity from a follow-on, we really don't foresee that today. We have enough space to go to debt. We have enough space even in balance sheet and in cash. So we really don't foresee going for other kind of operation. Again, we see the FIBRA as an other tool that it makes sense if the price makes sense, if it's in some way optimize our balance sheet in terms of the price that we could get, we will continue this. Saying in other words, if the price that the market are put into the FIBRA is not the correct one, we will not issue the FIBRA. That is, I would say, it's important to put it in the table and make it really clear. Our cash position, our leverage is pretty good to even continue leveraging our MDPs to our balance sheet. But the thing is, we think that we could bring additional optimization to the financials of the company if we issue the FIBRA on the correct price. If that is not happening, we will not push the FIBRA in any case.
And besides that, and just to complement, they won't represent a dilution effect to our shareholders.
Okay, that's very clear. Thank you.
Thank you, Alejandro. Well, this was the last question, Raul. And Saul, thank you for your time.
Thank you, everybody, for joining us today. As always, all our IRO team will be ready for answer any of your questions. And thank you for your time. Have a great day.
Thank you.